Did you know that everybody will be wiped out on the markets in 20 days, according to Cathie Wood? Wood has become a significant figure in the financial industry, and many people heed her words. Stay tuned and keep watching to find out what Wood meant by this. Today's economy is arguably one for the books, and not in a good way. Threats of inflation and global recession plague not only the financial industry, but also the rest of the industries that suffer as a result. Even big corporations like Tesla have been affected by these economic dilemmas. At this point, the leading EV company is doing its utmost best to address such issues along with other problems the company is facing. In today's video, you will find out why everybody will be wiped out of the markets in 20 days, according to Cathie Wood. The bad news is that the Fed has become extremely aggressive and hawkish, says star investor Cathie Wood. The good news is that we are beginning to get data that is confirming that the U.S. economy is in a recession. Wood added, she believes that Europe and China have effectively been in recession as well, so it can now be considered a global recession. Cathie Wood is an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Cathie Wood provides monthly updates about several things like monetary and economic policies, innovations, what can be expected in her field of expertise, and comments on the Fed's decisions. The Federal Reserve System, commonly known as the Fed, is the central bank of the U.S. which regulates the U.S. monetary and financial system. Wood added that they are starting to get a lot of indicators that prices are coming down, and she thinks that the inflation that everyone has been worried about is the wrong way of looking at the world right now. She emphasized their belief that deflation is the bigger risk. We believe that deflation is a much bigger risk, says Wood. She added that they have been saying this for a long time. Wood said that they have been ridiculed for saying so and were even challenged by those who were sure that the U.S. is into a 70s-style inflation scenario. By definition, a recession in economics is a business cycle contraction where there is a general decline in economic activity. It is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. Recessions generally occur when there is a widespread drop in spending. Inflation is the rate of increase in prices over a given period. Inflation is typically a broad measure, such as the overall increase in prices or the increase in the cost of living in a country. Deflation, on the other hand, is a decrease in the general price level of goods and services, which occurs when the inflation rate falls below 0%. Inflation reduces the value of currency over time, but sudden deflation increases it. We think that the pricing action, and I'm not just talking about stocks and bonds, I'm talking about commodity prices, crypto prices, and perhaps soon even housing prices, that many people will conclude the greater risk is deflation, Wood said. Although Wood claims that she does not think that deflation is a bad thing per se, but that the way the Fed has approached it is what can be considered a bad thing. Wood said that deflation can be a very good thing if it is caused by technology and progress, and that the U.S. is bound to see a lot of that over the years. But as of now, they are looking at bad deflation and that the U.S. economy will have to get through this. Wood said that in the next Fed move, the Fed will be out of its quiet period, so all Fed governors have been traipsing out saying that the U.S. will go another 75 basis points, Wood thinks. She said, "We think that they will rethink that, as we get not only more pricing signals but earnings reports and guidance from companies who will be probably confirming that the U.S. is now in recession." It can be noted that in late June, Cathie Wood warned that the U.S. is already in a recession. ARK Invest CEO Cathie Wood admitted during an interview with CNBC that she had underestimated the severity of inflation and proceeded to claim that the U.S. economy is likely already in a recession. Why do you think Cathie Wood remains to be a firm Tesla supporter despite such economic issues that will definitely affect the company? Let us know what you think in the comments section below. Wood said that the U.S. is now in a pretty significant inventory recession, but that it will not be anything like the systemic recession and financial crisis in 2008-2009. She explained that it will be more of a garden variety. From the mid-1940s to 2007, the average U.S. recession lasted 10 months, according to a 2008 study by the Federal Reserve Bank of San Francisco, with the shortest in that stretch lasting only 6 months. Wood said that innovation is recession-resistant, pointing to the recent shift back towards growth stocks as a sign of this trend, as their growth rates are superior to the rest of the market, which tends to be more influenced by the cycle. In a recent interview, Wood said, "We know that innovation in the public equity markets, not private equity markets, has been ravaged in the last year. It's been about a year that it has been ravaged." And Raul mentioned that when there is a change in expectations, the thought that the economy would open up and interest rates would go up, inflation would go up but would be tamed. Last year, despite the change, the supply chain issues did not go away. That said, the fear about what inflation and interest rates are going to do has gripped the innovation space at first, and now it seems to be affecting the market a little more broadly. Wood blamed supply chain disruptions and geopolitical factors like the war in Ukraine for exacerbating inflationary pressures beyond what she had anticipated. She also said that a recession driven in part by mismanaged inventories had already begun. During an interview with CNBC's Andrew Ross Sorkin, Wood said, "We think we are in a recession. We think a big problem out there is inventories, the increase of which I've never seen this large in my career. I've been around for 45 years. The innovation-focused investor said inflation has turned out to be hotter than expected due to supply chain disruptions and geopolitical risks." Wood explained that supply chain issues had led major retailers to mismanage their inventories, leading to a glut of certain finished goods like furniture that was in high demand during the pandemic. She said that even the best managed companies in the world are having problems. She added that the surge in inventory seen over the past year has been larger than anything she has seen during her 45-year career. "We were wrong on one thing, and that was inflation being as sustained as it has been." Wood said, "Supply chain, can't believe it's taking more than 2 years, and Russia's invasion of Ukraine, of course, we couldn't have seen that. Inflation has been a bigger problem, but it has set us up for deflation." Wood said, "I think the fears here are going to shift from rising interest rates and higher inflation, potentially to recession especially. And you've heard me on this before, because we've seen inventories piling up throughout the ecosystem." According to Wood, innovation stocks in the public equity markets are down from 50% to 75% in the last year. Wood said consumers are feeling the rapid price increases reflected in sentiment data that's fallen to record lows. She pointed to the University of Michigan surveys of consumers, which showed a reading of 50 in June, the lowest level ever. Inflation measured by the Consumer Price Index rose 8.6% in May from a year ago, the fastest increase since December 1981. Jeremy Siegel, a professor at the Wharton School of Business, shares Wood's sentiment regarding the U.S. being in the middle of a recession. Siegel told CNBC the economy likely contracted in the first half of the year. "I think we're actually in a mild recession." He added that indicators he is watching point to the economic slowdown into the third quarter. In particular, he said data on the U.S. money supply has declined, suggesting we are getting a handle on inflation. For more Tesla stock content, visit our channel and watch our other videos.